CSRD, EU taxonomy, EFRAG. These acronyms have been making waves recently. But let's be honest, how many of us fully grasp their significance? And most importantly, what will be the impact on our organizations? Today, we will be listening to Thomas de Cuyper, Director, and Zhou-Heng Yang, Manager, who are both running ESG reporting at PwC. They will help us navigate through the latest sustainability reporting landscape. Our focus will be on CSRD, the now famous Corporate Sustainability Reporting Directive. We will see that CSRD marks a big change for companies. They will now have to report on both financial and non-financial activities. With our guests of today, we will find out more about the EU objectives behind the CSRD, its deadlines, but also the sanctions for non-compliance. Together, we'll identify the challenges you may encounter when trying to comply, and of course, get some tips and tricks for a smooth implementation. Let's listen to Thomas and Zhu.
Welcome to this episode of the ESG podcast series, where today we'll be discussing sustainability reporting and more specifically also the upcoming thing, CSRD, the Corporate Sustainability Reporting Directive. My name is Thomas de Cuyper. I'm a director at PwC, focusing specifically on sustainability reporting and also supporting a lot of our clients on implementing the ESG or sustainability reporting. And with me here today is Zhu. Zhu, can you also introduce yourself?
Yeah, sure, thank you, Thomas. Yeah, I'm Zhu. I'm a manager within the PwC, within exactly the same team as you're working, Thomas, working very closely together with clients on everything related to sustainability reporting, helping them to get up to speed with the CSRD, EU taxonomy, many other types of initiatives. And happy to be here in this podcast. Well, short, maybe not, but what you really see today is the market, the regulators, the whole landscape is changing. While in the past it was companies focused a lot on, of course, financial information. Financial information was crucial, still remains crucial, of course, today. A lot of investors and so on, shareholders, of course, they look at it. But today, as the current landscape is evolving, there's multiple demands, let's say pressure from multiple angles, different stakeholders, and I'm talking about stakeholders both internally as well as externally for companies. You have your own employees, but you have also, of course, your suppliers, your customers, other types of stakeholder groups. They are demanding more information. Financial information is not sufficient anymore. And in this regard, also, for example, in Europe, where you have already alluded to the CSRD, it's one of the many initiatives ongoing currently in the world. It's not only in Europe, across the globe you have different initiatives as well. ISB with their standards. You have also, for example, the SEC, who are also imposing climate-related disclosures. But it's clear that in Europe, Europe is quite, the front runners, I would say, Thomas.
The pioneers of ESG reporting, and I think the main thing is indeed that the objective is to put the non-financial information at par with the financial information, and I think if you look at the past or actually the current situation, there's so many standards, reporting frameworks, and we see that many companies are kind of cherry picking what they want to report and to come out in a good way and in a sustainable way. But that with especially with the CSRD now, that there's a lot of focus for companies to be consistent, transparent, and that there's also a sort of a comparativeness between companies for all the different stakeholders.
Yeah, exactly. Well, that was the overall goal. The objective of the EU is, of course, well, you mentioned all these different standards, frameworks that are existing. It's very hard for a reader, for stakeholders to understand, and to indeed compare companies amongst each other. And that is one overall goal of Europe, is to, through the CSRD, create this kind of consistent, comparable, but also reliable framework standards to compare companies against each other in terms of their sustainability performance. So there's also an audit requirement that will be upcoming. So that's the reliable part, you could say. It's not only reporting something just for the sake of reporting. It will need to be robust reporting, which is of course part of the challenge.
Yeah. So it's clear it's no longer optional. It's mandatory, and it will be audited. So that's also putting it at par with financial information, indeed.
Exactly.
But I think also, and we work with a lot of clients, and we know that some clients also consider it as more of a compliance thing, or even a compliance burden, and indeed it's very overwhelming for some companies. But it's, in a way, it's not intended to be a compliance burden. I think the intent of the CSRD and of the ESG reporting is actually, especially in Europe, to move the whole economy to a more sustainable economy, and with the CSRD and also the EU taxonomy, we didn't mention that one yet, to be able to kind of reorient the capital flows to the more sustainable or green companies, you could say.
Exactly. Yeah. And maybe on that point as well, Thomas, because a lot of people think the CSRD, it's a reporting framework, it's a reporting standard, of course, which is the case. And then a lot of companies might perhaps think it's just about metrics. But actually it's more about metrics, because the CSRD not only requires companies to disclose the purely figures, let's say, but also require companies to say something about their business model, their strategy, their policies, targets they have set forward, action plans that set forward, to really make sure that they reach their ambitions, they reach their targets that they put forward for themselves. So it's really the whole picture of, it's more the strategic angle. How does it translate into specific objectives, actions, and then of course how does it translate into figures, which goes to their annual report, of course. Then.
Yeah, indeed, it forces companies to put in place an ESG strategy or to include ESG in their business strategy.
Exactly.
And it's also what we see, and you referred to it at the beginning, there's a lot of pressures from different stakeholders, and I don't know how you experience that, but in my interactions with clients, you more and more see those pressures. If you look at investors, I work a lot with pharmaceutical clients, and if you go back one or 2 years, the pressure from investors, especially in that sector, was not so big yet. But you see that month after month, it's actually increasing, and the topic comes more and more prominent also with the investor base. Same thing for attracting talent. It's not just about the reporting, but the reporting will help new talents to be convinced to work for a company. And it's actually going that far that for some companies it will be the license to operate, you could almost say, because I've worked for a couple of clients that do a lot in public tendering, and if you haven't got ESG metrics or ESG performance, and you can demonstrate that, then you're out of business, and you will not be able to participate in certain tenders. And it's coming more and more for private tenders as well.
Exactly. Yeah.
So we see a lot of companies that are still more considering at the compliance requirements, and sometimes I also get the question, or not even sometimes, actually quite often I get the question, but what if we don't comply? Did you also get those questions too?
Quite often, of course. And it's of course a logical question, because it comes with a huge, if I may call it, burden. It's a huge effort. Companies will need to invest in it. You cannot, from one day to another, just start reporting on ESG. You need, of course, resources, you need people, you need systems, you need processes. These people, the systems and so on, of course, they need to be up to speed. People need to be upskilled to be able to know what they're dealing with, because at the end of the day, ESG and the reporting standards and the CSRD and whatever is out there, basically, in terms of sustainability reporting, it's a very complex topic. There's so many different areas. ESG by nature, sustainability, spans across so many different topics. It's just it's a huge burden, if I may call it, if you look at it that way, to get to that level in which you're able to report on, to act on it, of course. And so in terms of consequences, I believe, if I'm not mistaken, quite recently, the very first, the CSRD is a directive, so it needs to be transposed into national law, of course. The deadline for doing that for the European nations is by the way, I believe in June. It will be mid this year that really the nations will need to transpose this into national law. I believe France has already done it. France has already done it. They're the first, I believe, probably the only country at the moment. Well, in France, for example, I believe the fines for any infringement on not being able to report on CSRD or obstructing the auditors to audit the CSRD reporting obligation, if I'm not mistaken, it can be fines of 75k, but also, of course, the usual, potential prison time. I read here potential 5-year prison time due to, not being able or not being compliant, basically, with this regulation. The directors will be held liable for that. So that's an example of a potential, let's say, financial consequence. But of course, all the other topics that you have mentioned, the talent retention and so on, finding the right people who want to work for a company, but also just, is the strategic angle, right? The strategic agenda. Sustainability, by definition, is about long-term. It's about long-term view. It's about being future-proof, basically. Yeah. And just to make it concrete, one specific example, if you are, for example, a company who produces beverages, you will have a bottling plant probably somewhere. You will need to extract natural resources, of course, to be able to produce basically your beverages. Well, there's of course a link with natural resources that are scarce, basically. If you're not able to spot that, if you don't identify those type of risks, if you're not able to put in place specific actions, policies to deal with this scarcity in resources, if you're blind to it, well, maybe in due time you will not be able to produce anymore because, you won't have water anymore, for example, to produce your beverages. And that will be a financial consequence, of course. That plant will maybe become useless. You will need to depreciate it. You need to invest in new technologies. You need to move, or maybe you get even taxed because you are not, you should have not extracted too much water from the natural environment. It could be.
No, indeed. And I think ESG reporting should really be considered as a means to an end and not just a compliance burden. And in the end, it's all about businesses being responsible and taking responsibility and accountability towards the impact they create in the whole society. I think that's the key thing to take into account, and that's also the intent of the CSRD.
Exactly.
And with ESG reporting, it's forcing companies to think more in that way. If we think about how, and that's also one of the challenges for many companies, that you need to look at the full value chain of the company. So it's not just your own operations, but it's also the subcontractors you're dealing with. Where do you source materials or raw materials for creating your products? And it's taking responsibility not only for your own operations, but also taking responsibility for what happens in your full value chain.
Exactly,
and by doing that, Europe is actually forcing companies to make conscious decisions about how they put in place their supply chain.
Yes.
And that is a big difference, which will take some time to really materialize, I think.
Exactly.
But that's a bit the background of the whole regulation, if I can say.
Gone are the days that companies can hide, let's say, between the four walls of their own company. You need to look at the value chain. It's an additional dimension, additional complexity. What will probably happen in the market is, of course, not only your company will be subject to the reporting obligation. There are many other companies who will need to report against it. There will be some kind of trickle-down effect, if I may call it. If more and more companies start to report on it, more information, more data will be available, which makes this exercise, which is at this moment super complex because of data availability and so on, probably more smooth. If I'm an optimist in this regard, more smooth probably in the future.
No, but it's true. I think they estimate that there's 49,000 companies in Europe that will be directly impacted because of the ESG reporting regulations. And in Belgium, there's an estimation of around 2,800 companies. But obviously, as you mentioned, it's the whole economy and even the smaller players that are not directly subject to the reporting requirement. They will still feel the consequences because their suppliers, their clients, will probably ask them questions on ESG. So it's the effect is even broader than that.
Exactly, yeah. So it's a huge exercise, and of course Europe realizes that as well. That it's a huge effort required, being asked of companies, funds asked of companies, investments asked of companies to deal with this, and they have listened somewhat. Thomas, I believe that they have done some, or let's say, introduced a couple of flexibility type of initiatives.
Indeed. Well, I think indeed the challenge is that the regulation is evolving while the companies are preparing. So the requirements are quite important or overwhelming for some companies, and the challenge has been but the rules are even not clear what needs to happen, but we already need to prepare in order to be ready on time. Yeah. It's a bit like building your car while you're driving. Yeah. It's not that easy for companies to take care of that. And I think indeed there's been some relaxation, if we may say so, on that front. I think there's been some transitional provisions, some things that where companies can, especially the smaller companies, can get a little bit more time to collect certain data or to report on certain topics. There's also the increase of the thresholds. That's a bit more because of inflation, recent, but it's a very recent
from
update.
December. Yeah, exactly. Yeah.
So I think it was the thresholds have slightly increased from 40 million turnover to 50 million and from 20 to 25, but still it's important for a number of companies to see how that evolves.
That will of course depend still on, because this is still on the directive level, let's say, it needs to be transposed into national law. Who knows what the nations will do, of course. The nations can still choose to still maintain the old threshold. That's of course to be seen then, and like we have discussed earlier, the deadline for transposition is mid this year. So very curious to see what the different nations will do in that regard. Yeah.
That being said, the nations can only make it more strict, and they cannot relax it further. I think that's an important one to take into account. I think that there's also, and that's also quite recent, at the end of December, and it will be quite welcome for many of our clients as well, and many companies that need to prepare. There has been some guidance that has been issued by the EFRAG, and the EFRAG is like the overarching body which is preparing all the reporting standards. So there's guidance on double materiality, on how you need to look at the value chain. That's, as mentioned, not only your own operations, but your full value chain, but also on how you can manage the different data points and implement basically the metrics. So that's also some important pieces of information which are available on the EFRAG website to the general public.
Yeah. I think it's good that companies, of course, take a look at those documents because, especially that implementation guidance on the double materiality, for example, methodological kind of notes are included. They're not always clear-cut, black and white on a lot of topics, but at least there's some content out there to read to support you in that exercise.
No. And the fact that they issue guidance is indeed it's quite needed. I think we are often working with clients in various sectors on implementing CSRD, and you do see a lot of challenges in terms of how do we make sure it will be audit proof, and how do we make sure that we know where to start in the first place. So what are for you the main challenges that you see in your projects?
Well, of course, CSRD, ESRS. Again, it's more about it's more than metrics, but of course, metrics, data points. It's a very complex endeavor. Its data points need to come from everywhere, and data is just not available always in every case. So that's a first a big challenge, of course, how to deal with this enormous volume of data point requirements, where to get it, who is responsible for it, how we're able to get it on time to be able to report against it. What about the data quality of it? Is it even reliable in the first place? So that's a very obvious, I think, challenge that a lot of the most companies, I would say, struggle with. The value chain, which we also already talked about before. Again, it's about data availability, but it's also about the engagement, I would say, with the value chain. How do you do this engagement, on what frequency, what format, what is essentially key to get from your value chain in terms of information, what is less important. These are questions, challenges, companies.
And how far do you need to go? Because value chains can be very extensive.
So, exactly. Where do you draw the line, basically?
Indeed. What I also hear a lot, and especially with like more multinational companies that are starting up the CSRD or the ESG reporting, that there's a lot of debate internally on where to issue the report, because you have different options that Europe is providing, and you can do it at global level. That would be encompassing all your entities worldwide. If you have a US-based company, for instance, then you do it CSRD reporting at that level, but you can also do it at more entity individual level, or at a sub-consolidation level in Europe. So there's a lot of possibilities that companies get to organize themselves, and it all has its pros and cons.
Yes.
And I also see that in a lot of companies, it's a bit the hot potato that is shifted from one place to the other. Nobody really wants to take the ownership and the responsibility for preparing the report, and I see that the challenge that a lot of time is actually being lost because of those internal discussions.
Yeah, exactly. Yeah. Well, it's very important that indeed companies this analysis cannot be underestimated. Of course, it's a very important decision to be made at the beginning of exercise, because it will have different implications, of course, how you need to set up your process, your systems, your reporting structure. But that being said, companies also need to take into account, and that's another challenge that I wanted to talk about. The timeline is just also enormously challenging. If you just combine with all of the points that we have mentioned, the volume of data requirements, the audit requirement that will be there, it needs to be robust as well. And all this within a very short time frame. The very first companies that will need to report on CSRD will be actually on this financial year. So reports issued starting next year. That's not an easy thing to do, of course. But the key message is for those companies who still needs to do that analysis of where to report, is to not lose too much time on it, and just to get started basically, with data points and so on. Because if you wait, then you will probably head into a lot of troubles down the line.
Yes, indeed, yeah. And then there's also the fact that I think, if you look at it, we refer to it in the beginning, it's putting the non-financial information at the same level as the financial information. But the big difference is that financial information has been maturing over years and years, has very robust ERP systems like SAP, like other accounting softwares that have been there for a long time. And for ESG, the most advanced tool that we often see is Excel, right?
Excel or Word, or there are many tools, of course, and of course all the technology players are jumping on it. It's a huge opportunity for them. But that being said, again, there's no one-size-fits-all yet. It doesn't exist, because data currently, which is, if it is from a system, there are multiple systems involved. The HR systems, you have, of course, the CO2 data or energy data, which is often kept in Excel or something. Financial data, of course, in SAP or another ERP solution. It's a bit spread around. So there's no clear-cut solution, I feel, today in the market. It's something that we'll need to investigate. But also companies, of course, will need to investigate in the near future.
Indeed. There's one thing for certain, and that is that auditors are a bit allergic to Excel and Excel sheets, right?
Exactly.
All right. No, I think that this concludes a bit our discussion on reporting. I think there's a lot more to say, and we didn't even discuss on EU taxonomy today, which is another.
Yeah, but that we need another podcast.
It's a separate topic on its own, I think. Indeed. Yeah. No. Thank you very much, Zhou, and let's check in for the next podcast in this ESG series.
Exactly.
Thanks.
Thank you.
Bye-bye.
Bye-bye.